What were the biggest nonprofit audit failures? Imagine working hard to support a cause, only to find out that your nonprofit's financial records are a mess or that funds were misused. That's what happens when nonprofit audits fail. These failures often come from weak financial oversight, poor internal controls, and sloppy governance. When these issues happen, they can lead to incorrect financial reports, misused money, legal trouble, and even lost trust from donors. One common problem is poor financial documentation. When nonprofits don't keep clear and consistent records of transactions, it becomes hard to verify where money went. This can cause delays during audits and raise questions about mismanagement, even if it wasn't intentional. Regularly reviewing and organizing financial documents helps prevent this. Another big issue is weak internal controls. If a nonprofit doesn't have proper checks and balances, errors or fraud can slip through unnoticed. For example, if one person handles all the money without oversight, it's easier for mistakes or theft to happen. Regular account reconciliations and segregation of duties are key to catching problems early. Misallocation of funds is also a major failure. Sometimes nonprofits don't track restricted funds properly or misunderstand grant rules. This can lead to spending money in ways donors didn't intend, which can trigger audit findings or legal issues. Clear tracking systems and staff training are necessary to stay compliant. Boards and leadership must understand their fiduciary duties. If board members don't review financial reports or ignore audit findings, problems can grow. Active engagement and accountability are vital. Without this oversight, errors can go uncorrected, and compliance can suffer. Accounting errors are common too. Nonprofits often make mistakes like forgetting to record revenue or expenses properly. These errors are more frequent because nonprofits often have fewer resources for accounting. Larger nonprofits with top-tier auditors tend to have fewer mistakes, but many smaller groups struggle here. Failing to follow IRS reporting rules is another failure point. Errors on IRS Form 1999, like not reporting insider loans or misreporting compensation, can lead to audits and penalties. Proper training on IRS forms and compliance is essential. Lastly, poor audit preparation can cause failures. Not organizing documents, not communicating well with auditors, or rushing the process can lead to delays or negative findings. Planning ahead and keeping records tidy makes a big difference. In the end, these failures highlight the need for strong governance, transparent practices, and ongoing education. Nonprofits should focus on solid internal controls, accurate record keeping, and understanding legal requirements. Doing so helps protect their reputation, keeps donors confident, and ensures they can continue their important work.